Hello, and thanks for joining Datarails webinar on how finance teams can plan for a recession. I'm Shoshana. I'm the Director of Product Marketing at Datarails. And if you aren't familiar with Datarails, it's a financial planning and analysis platform for Excel users that automates data consolidation, reporting, and planning. But it also enables finance teams to continue using their own Excel spreadsheets and financial models, because I think we all know how crucial Excel can be. And we're really happy to have you guys here. You're going to be taking a live tour of Datarails to learn how your company can prepare for an economic downturn. We'll be answering questions like, how do you plan for the unknown? How do you forecast our cash flow? And how do we track costs and margins in an inflationary environment? We've got Sean here. Hi, Sean.
Hi, Shauna. Hi, everyone.
Sean is going to be your tour guide here. Sean is a senior FP&A strategist at Datarails. He has 11 years of FP&A experience at Trend Micro, a multinational software company. Here at Datarails, Sean works with CFOs and finance leaders to help their teams solve the unique challenges facing their organizations. And his insights and experiences help finance leaders translate their strategic initiatives into the best practices of the highest performing finance teams. So we're really happy you're here to take us on this tour, Sean. But right before we do, I would really like to get a sense of what you guys are already doing or not doing to plan for a possible recession. So I'm just going to launch a quick poll. And then we'll get into Sean's tour. Keep responding. I see it's close. There's not like a single answer in the lead right now. Keep answering. 60% of you have responded. Okay, I'm going to close the poll in a few seconds. All right, let's see the results. So 36% of you said that you recently started preparing for an economic downturn. And then we've got 25% of you who are saying that you're deciding whether to take steps to prepare. And then the rest of you haven't started but planning to. And a few at either end who are either highly prepared or not planning to prepare. So hopefully this will, give some insights to all of you, especially those who are trying to figure out maybe where to start and what steps to take. Okay, Sean, take us on a tour.
All right.
Oh, one more thing before you start.
Okay.
I just wanted to tell everyone that there's going to be a Q&A at the end. So if you have questions while Sean is giving the tour, then just leave them in the Q&A and we'll be addressing as many as we can at the end. Okay, go ahead, Sean, all yours.
All right. Well, those are interesting answers there to the poll. It was almost pretty even bell curve there, with most people kind of landing in the middle. So the tour I'm going to take us through here is hopefully going to make those of you that have not started preparing yet realize it's not too late. We can get things up and running pretty quickly, and you can really start seeing how today there are FP&A tools around for FP&A teams to actually be able to deal with the recession, unlike there was in the previous recessions. Every time that there's been a recession in the past, we've kind of had to deal solely in Excel and our accounting systems and kind of mesh everything together, right? Well, today, luckily, there are plenty of tools at our disposal now to help us through at difficult times when they come. That, of course, it's not a matter of if, it's a matter of when. So as far as the tour itself goes, that I'm going to take us through, I'm going to walk everyone through just a real high level of what the platform looks like, how it feels, how we get your data into the system, that is accounting data, payroll data, that kind of thing. And then a little bit more into how the system actually works. So how we can answer some of those questions that are that Shoshana mentioned earlier. So I know I can't hear your questions now, but do note them as we go through so I can answer them at the end. And hopefully this is a fun ride for everyone. So
Thanks, Sean.
I'm gonna share my screen here and go over here first. Okay. So what I have pulled up for us first is the Datarails web interface. We tend to think of Datarails as having two interfaces. There's this, and there's of course Excel. Well, where we always end up being, regardless if we plan to or not, that's where we will end up bringing our reports here, where we doing our we can do budgets, forecasts, scenario planning, all sorts of things. However, here in the Datarails web interface, there's a few points I want to just draw our attention to just for future reference. We can work through workflows in the top left. This is where we can work through budgets and forecast processes, where we can set workflows up for regular reporting. We can also save reports out here. You can still, with Datarails, save reports to say a local drive, box, Dropbox, your computer if you'd like. When you reopen it, the Datarails connections will still all work. But if you save the files out here, there's actually complete version control, version history, audit trails, that kind of thing. Also out here is where we can access dashboards. We'll touch on those near the end. And then there's some other tools in here that if you have some questions later on, maybe we can get into. So we like to think of Datarails as working in a three-step stage, three-step process. So there's the source, the structure, and the output. So source being, all right, that's source data we're going to start with. In this environment that I'm in right now, we call our source section actuals. You can call this section whatever you'd like, and call it sources if you want. And this is where we're going to be bringing in your source data. First, most popular set of data to bring in, or it's going to be accounting data, preferably transaction level detail. If you wanted to bring in trial balance, there's no problem with that, but bringing in transaction level, entry level detail is going to be where this gets the analysis tools get really powerful, which we'll walk through here shortly. Other common sources of data to bring in, like payroll platforms. So when we start doing headcount analysis, headcount planning, that we actually have salary and headcount information in there rather than just the payroll kind of journal entry that we end up seeing in the accounting systems usually. We can also bring in data from systems like Salesforce, get some more operational data inside. And once we map all this data into the system, whether it's through a direct integration or just a data dump from an Excel file or CSV file, our team on the Datarails side will handle mapping all of that data into a database. So that's the lift that's taken on our side. There's a team here of customer success managers that are made up of people like me who were in finance for a while and then got brought over to Datarails, and it's their job to bring in data into system structure and map it for customers so that the reports that we then want to start creating later on are easy, replicable, and refreshable. Now, during that mapping process, there's a few things that are going to be done. We're going to be setting up, say, lookup tables that could contain information pertaining to, say, payment terms or sales regions. Most common kind of lookup table would also be like a unified chart of accounts, especially if you have more than one entity or more than one accounting system that has different charts of accounts. We'll be able to create a unified chart of accounts, mapping all of them together. And in these mapping tables, like the GL mapping table, we'll start being able to apply tags to say, okay, this specific GL account will actually be routed to this part of the income statement or this category in the balance sheet or cash flow statement. And speaking of tags, we can apply tags in other ways in the system. We'll be applying tags, say, to any data that comes in from our accounting system. We can tag it as actual data, at the data type being actual. Whereas if we go through a budget process, any data from a budget that is submitted into the system will be tagged as budget. With a forecast, we tag as forecast. This is how the system starts differentiating between actual data, budget data, different versions of the forecast, and so forth, so that when we get time to actually pull data out of this database that we're creating, we're really just pulling based on the fields we want to use and then filtering down to the tags that we have applied to make, say, income statement It's also how we would tag, we'd also be able to use date tags to be able to filter and break down data by specific date ranges, periods, months, quarters. I mentioned budget and forecast. We're not going to go deep into the budget and forecast section here, but we will also be talking about the scenario planning, which is the type of planning, obviously, scenario analysis kind of things. So we'll be touching on that a bit, but actually where we want to start is, okay, we created this database with all of our data that came into the system, and now how do we use it? So to do that, to actually create a report, I'm going to use this P&L file here as an example. The fact that this is a P&L file isn't really so important. This could just as easily be a balance sheet, cash flow statement, could be maybe a regional sales report. What's really more important here is how we're bringing data into the system. We're bringing data in using the Datarails add-in up at the top of Excel here. And more specifically, we're using this formula to tell the system what information we want to pull in. So we're using this @dr as the call to the Datarails cloud and telling the system we want to pull in from the cloud data from the database called value, super creative name there. And on that creatively named database, we want to pull in these fields. We want to pull in a specific period, business unit, P&L category, etc. So we can write these formulas out if you want, copy them down like a classic Excel formula, but you don't actually have to. The way this is actually really put together is a little bit more like a pivot table. There's a tool called Data Explorer that allows you to just access all the fields available on a specific database, drag and drop the fields you want to use, and it puts together the report for you. However, we put this together in a format of a formula for two reasons. First, it's familiar. This is Excel we're using. This is native Excel. This is not an Excel-like environment. This is native Excel. So we want to use an actual formula, like an Excel formula, to bring data in. The syntax here is very similar to a normal Excel formula. In addition to that, we can combine a Datarails formula like this with a native Datarails, with a native Excel formula. So in this example, we're pulling, say, January through March data. So that's what's that, about 60 days or so, or about 90 days. So it's Sarah, what about this $11.2 million revenue figure we have here in cell C7? What if I want to divide that by, say, 90 days? I'll do a quick division and I can see I roughly added up to about 125K in revenue per day. That's where we combine both an Excel, native Excel formula with a Datarails formula to be able to pull in, to be able to calculate that day, calculate that revenue by day. So you can probably see also there that when I erased that division by 90, that the total went back to this 11.2 million. The system is very flexible and able to pull in whatever fields you want to choose. And from there, we can actually be able to form some pretty cool drill downs, analysis, that kind of thing. So any of these figures on here, we can drill down into. Now it's in this example, we have the majority of this data coming from our accounting system. However, it's fairly common for customers to have a P&L file like this, where you could have, say, your revenue information, maybe like your normal OpEx information like we have down for the down, pulling from our GL system, our accounting system, but line 15 salaries, that could actually be pulling from our payroll data. So if I drill into there, it actually showing the detail of the salary and headcount information. So, but let's just to keep this simple, let's just drill into like the revenue information. Now there's three types of drill downs in Datarails. We can access our drill downs up here at the top. There are three types, like I said, drill down lists here. Basically a classic pivot table drill down where you drills in to the number or a series of numbers that you have highlighted, and we'll show you all the underlying transactions that make up that total. The drill down by, a little cooler. So this is where we can start really telling the system how we want to be able to read our data. This is where, you know, if we're concerned about being able to quickly and easily read the data to be able to understand where our costs or where our revenue differences are lying, this is where these drill downs can be pretty cool. So let's say, like, I want to drill down into these numbers right here. I want to compare my revenue, actual revenue by product versus my budget revenue by product. Like I mentioned earlier, we are differentiating between actuals, column C in this example, column C through G, and column I being budget, solely based on the tag of budget we mentioned earlier. So this is looking at anything tagged as budget. This formula here, everything tagged as actual, meaning that if I just highlight the two, I can do a quick drill down by. What I'm going to do a drill down by is to tell the system what level next down I want to go to. Right now, everything is already being summarized by the P&L category. Now I know that there's rolled up data being rolled up under that under subcategories. Of course, I know that because I know my data just like you know yours. So let's say I know that my detail of my revenue information is actually lying in the account name field. So I want to say drill down to the account name. I'm going to press OK. System is going to do two things. It's going to give me a classic drill down where it's going to show me all the underlying data that make up that total. But more interestingly, it's going to create for us this classic Excel pivot table. And if I just real quickly draw in a scenario, I have a real quick budget versus actual analysis of revenue by product. Now, this is a good example of how the drill downs here can be very powerful when we bring in all of our transaction level detail from our accounting system. It's also a good example of how any data that we bring in should be just as detailed. So that if I had been a little less lazy and actually budgeted my $24 million of product revenue out by product, this drill down could be even more powerful. This is where when we want to start drilling down into specific costs, specific variances, to understand where specific changes in our current status line can become very quick and easy. So keep things rolling along here.
Hey, Sean, I see a question coming in. Can you tell us a little bit more about how this drill down helps people plan, plan for uncertainties?
Absolutely. So it's really more a matter of visibility. So the drill downs will allow you to be able to see whatever level of detail you bring in. So a good example of this that I have seen a few customers do recently is their data that they bring in from a revenue standpoint is including customer data. So the actual customers that are buying their products, they can see when they drill down into the data. So they're seeing spikes in sales from specific customers, especially recently, when they do these drill downs. Customers that they are spikes they wouldn't normally have really seen because they're looking at the data in the more aggregate total. So they're being able to drill down into the data and see, all right, I'm seeing specific spikes in customer sales. Why is that? Then going to say sales, marketing, and asking them, is this customer, is this business actually growing? Are they actually purchasing more because they want more of our product, or are they stockpiling in an effort to get people to get as good before our prices go up more because of inflation? So it's an interesting way that customers are being able to identify current trends that they're seeing, but to be able to understand looking forward, is this going to continue? So just because this customer is purchasing a lot this period, is it because we can expect them to purchase more and for periods looking forward when we plan for next year, or is this a temporary thing where they're trying to stockpile? So it's just one example of how we can use these types of drill downs to try to be able to empower finance teams to ask the right questions of the right teams at the new organization.
Thanks.
Okay, so let's switch gears a little bit here. Another question that we talked about that Shoshana brought up earlier is like, okay, how do we plan for the unknown? Just as a more general stance. So how do we plan for the unknown? Now, overall, that means that finance teams are constantly changing. We're changing our outlooks. We're changing our confidence in what's going to be happening in the future. Which means we need to easily be able to update our financial models, assumptions, and inputs. So, if you see specific costs going up or specific revenue projections changing, you need to be able to easily see the effects of those changes. Now, the way Datarails can help with that is scenario analysis. So scenario analysis, this what I have here is a 5-year scenario model, financial model. And what this is, we're taking a baseline of information. It can be either our previous year's actuals that we brought into the system, or it could be, say, a budget, like a budget that we set at the beginning of the year. And we're using that as a baseline of information that is on our database. From there, we can then line up against the database, a series of assumptions with new. Sorry, my dog here is having some fun with me. We will line up assumptions of new inputs to see what the results of those would be after, if they were to be true. So what is really happening here is, in this example, we have this summarized P&L, cash flow, and balance sheet right now. All right, and then in this example, this happens to be for a software company. So revenue in this example is represented by ARR. We also have a cost section here where we have costs broken down by department, including all of our breakdowns for travel, salary costs, R&D, and so forth. We even have some hiring plan breakdowns in here. And so what we're going to do is we're going to input some new assumptions for costs, for revenue, and we're going to see the trickle down effect of those assumptions in our P&L, balance sheet, and our cash flow. So the two assumptions tables I have for us are first for revenue. So anything in here I can change. Say, all right, let's imagine that we're projecting revenue growth of, say, $5 million. And we also think that we're going to be able to need to increase our sales team by, say, 1 person each year. So something like that. So those are our assumptions. So those are our assumptions. We want to press this submit button, top left corner. The system is taking these assumptions, submitting them into the Datarails database, and we're going to come back to what that does. Second, next we're going to go into our cost assumptions. So we have this input page full of different assumptions, changes we can make to different types of costs. It's important to note here that the format of these tables, the format of the model, is not set. You can use models you already have. We can start from scratch with templates. This is just an example of how this could look. So as far as cost changes, let's say we think we're going to have to increase maybe our traveling costs for our marketing team. We think we're going to maybe have to spend $5,000 for them this year. You can also notice that we have 3 different plan versions, i.e., 3 different scenarios we're projecting. So in scenario 1, take $5,000 in marketing travel costs. Travel could be $10,000 in version 2, or $15,000 in version 3. And then, of course, we can make other changes. Let's say in order to keep our R&D personnel on, we're going to have to give them a 10% raise. We're pretty sure about that. So we're going to say 10% in every scenario. And we're going to press submit once again, top left corner. Now, what's very cool, kind of I think an underestimated, but very integral difference in Datarails versus some of the other platforms out there is that the database on Datarails actually can do calculations. We're not totally relying on Excel to perform calculations. So these new assumptions that we have submitted are now being calculated on the database, meaning that if I go back over to my model, I can see now in this refresh button at the top of the Datarails ribbon, it now has an exclamation point on it. That's the system telling us that new assumptions have been submitted and are available for us to see here. That same exclamation point will be will be there on a refresh button every time new data is brought into the system, say from your accounting system, and you want to refresh your report from there. So in a moment, I'm going to press that refresh button. And when I do so, we're going to see what the effects of those inputs are to our top line revenue here, as well as to operating costs, because remember, we changed some of our R&D related and sales and marketing costs. We're also going to see the changes to our cash collections, our cash flow. We're even going to see changes in our cash balances in the balance sheet. So I'm going to press this refresh button, and we'll see some of these figures update. And then after this updates, so you can see so that they all increased there because I made it mostly increases. Then we can also then use this filter to toggle between the different scenarios that I input. So let's look at maybe version 1. Looks like the numbers will refresh again. These are all calculations done on the database and then just being pulled in via those DR formulas we looked at earlier from the database and into this Excel file. So that's how we can use scenario analysis and Datarails to be able to quickly change inputs and see what the effect would be going forward. In this case, happen to be looking forward for 5 years.
Sean, we have a question on the scenario planning. Tracy's asking, how do you track any changes that you've made?
Great, good question. So any change that you make, so let's think of version control and version tracking in Datarails, kind of like a mixture between how Google Sheets will track changes and how Microsoft Excel 365 allows you to interact at the same time with somebody else. So basically what I mean by that is every time that submit button is pressed, so whether it's with this file here and I want to press the submit button to actually save the file itself, or I do it like I did before where I had an assumptions file bit like this and pressed submit. Not only is the system taking all the values within this file, submitting it to the database, and then recalculating to pull the result back out over here, but it's actually also saving that file, that version of this assumptions file, for example, to the Datarails cloud. More specifically, it is saving it to a file box called ARR assumptions. You can see that where it says process ARR assumptions, that's where this is actually being saved. I can show you real quick where that is. Back over here in the Datarails web interface, I go to SAS scenarios, go to assumptions, and then ARR assumptions. I can see where this is actually where that is being saved. And a moment ago, I pressed submit, right? Well, right here, this is that version that I just pressed submit for just a few moments ago, about 5 minutes ago. There you can see. I've pressed that submit button quite a lot. Other people have pressed it as well. Every time that submit button is pressed, the file itself is saved. So you can revert back to previous versions of any file that you submit onto the system, whether it's a final version of, let's say, an income statement or a set of assumptions like this, and you can revert back to previous versions. You can compare between versions, but more importantly, you can track who's making the save into the system, and you can also always see what the most recent version of the data is based on this little disk symbol. That means that version that we're looking at there, version 77, is the most recent version of this file. If I want to revert back to a previous version, all I have to do is press this little hamburger button and click include in database, and that will then make number 76 there, the most recent version of this of the ARR assumptions file. Kind of a long-winded answer there. I hope it made sense.
Great, thanks.
Okay, so the next, I think, logical step here is then to, okay, we've talked about the scenario planning, but let's take it a step further, say into cash flow, like the projection of the cash flow in a little more detail. Now, it's going to, of course, like anything, be based on the data that we bring into the system. Now, the example I'm going to show here is it's kind of a payoff of what we just did. Instead of an overall scenario analysis, we're going to do a headcount scenario analysis. I'm going to show you how the changes we can make in a headcount file, i.e. the salary data, is what will flow into a cash flow, a change in cash flows from payroll perspective. So,
Sean, before you show us,
Mm-hmm.
Before you show us, can you just tell us a little bit about how understanding the headcount and the cash flow is going to help finance teams get ready for different potential scenarios?
Absolutely. So I'll show you by first showing where we're going to watch this go into. So this is a pretty classic cash flow statement. Nothing all that exciting here, except for all of the file or all the data here you can see is connected to the Datarails cloud using Datarails formulas. So a finance team will be able to use this to be able to, in this case, we're going to make some adjustments to payroll. So we can see, all right, if we hire these many people or apply this certain amount of this certain raises, then that's going to change our salary outlook going forward by X%. Right now, we can see the current forecast is showing our payroll outflow of about $3 million per month. The question is, all right, we need to plan the next half of the year. What happens if, in order to yeah, everybody might think there's a recession coming. It very may be true, but if we saw the jobs report last month where 528,000 new jobs were added by the U.S. economy, it seems like hiring is still very much in full swing. So we need to understand what it's going to take to keep people on. We need to what it's going to take to hire new people. And so when we look at a scenario of headcount planning, we're going to be able to see how the results of that will flow into our cash flow forecast looking forward. So speaking of that headcount scenario, what we have here is a headcount file that we brought in from a make-believe payroll system. It did come in from a payroll system originally, but obviously we changed all the names, the salaries, and so forth. And so we have about 20 different to be hireds right here. We have all of our existing employees with their positions, their departments, their hire dates, salaries, and so forth. And then we can take this, just like before, as a baseline of information and then line up against it some assumptions of raises. For example, saying, what if we have to give raises of, say, maybe 8%? I'm going to be really generous, 8% across the board, 8% for everybody here in scenario A, or maybe we need it to be 10%. Okay, that's just going to be our example. So those are the assumptions we're making. Okay, people are still looking for new jobs. We want to keep them on. We're going to say, all right, we're going to give you an 8% raise or a 10% raise to make sure you stay on with us. And press the submit button, the top left corner, just like before. These new assumptions will be submitted to the database. And then over here, you can see back on that refresh button with that exclamation point, it's telling us that new scenarios are available. So I can say, all right, let's look at scenario B where we're giving everybody a 10% raise. Let's see what that looks like from just a headcount perspective. We're going to see our base salaries increase, of course. So we saw those increases there. And then the question is, okay, what does this mean looking forward? So if we then, from a cash flow perspective, we then move over to our cash flow file, here our 52-week cash flow file. We still have those $3 million figures there for payroll, but it's because I haven't refreshed this yet. But when I press refresh, this formula right here, which is pulling from Datarails, right? You can see the embedded Datarails formula right there. It's going to refresh and pull our newly updated numbers in. There, right there. And then we can drill into the figures to see what we actually submitted. And that is, we can see those headcounts that we just submitted. We can see, for example, DJ Alonzo right there, and the salary that we submitted for him. That's him right there, represented lines 49, 50, and 51. We go back over to our headcount scenario and see him represented here in line 25. So being able to adjust salary from, in this case, we were obviously increasing the salaries by department level. Doesn't have to be like that. You can increase salaries individually, make individual changes to the projected salaries. And when you press the submit button here, not only is this then living as a scenario analysis for headcount, but you can then see the results of it in a cash flow, be able to understand how such a change is going to affect your overall cash flow model.
Thanks, Sean. We have a relevant question that I thought we could address now. What if you don't want everyone in the company to see everyone's salaries? Is there a way for people to see only specific things while the finance team sees the whole picture?
Absolutely. So the way we handle that is back over at the web interface, down at the bottom left, see this area called admin. So anyone who is an admin, generally we have 1 or 2 admins for each customer. So it'll be a person assigned on your team, and basically the responsibilities of that person, or the duties of that person will be the same as other users. The only difference is that they'll have access to this members and groups section, which allows them to set permissions. So now you can set permissions on to the point where, like, okay, only this person can see the specific report or the specific dashboard. But doing it this way actually allows much more granular control of the security of different types of data. So let's say we want to control Dan here. We want to control his access to a specific set of data. So I want to say, all right, I'm going to edit his permissions filter, and I'm going to say it's okay for him to see headcount information, but more specifically, it's okay for him to see their names, employees' positions, what department they're in, even when they were hired. But when it comes to their salary, I never want them to be able to see salary. So I'm going to take salary, say select none, apply. Now when I press save, Dan will be able to, when he looks at reports, dashboards, he'll be able to see the names of employees, their positions, when they were hired, and so forth, but he'll never be able to see their salary information because it's completely filtered out here. So whether he is trying to drill into data in a report, put together a report, look at a dashboard, doesn't matter what it is, he'll never be able to see the salary information, the individual salary information for anybody. You can, of course, apply multiple filters there if you want. You could say, it's okay if he sees salary information, but only say for people in the product team. So you can see salary information, but only those on his team. Let's say he has at the product team. So that's you can kind of bifurcate a little further from there, saying, okay, so it's okay if this condition is met. In this case, the condition being the functional area is the product team.
Great,
Hope that
thanks.
makes sense. Okay. So then I think the last question we were talking about addressing is how do we track, and another like common question we're getting a lot. This is really why we thought this would be an interesting subject to tackle, is better tracking of AR, AP. More finance teams I'm speaking to are getting more and more focus on working capital just in general. They want to be able to more easily track things like working capital days index or days receivable outstanding. So I think it's probably a good time to go in dashboards, because it's an interesting way to be able to visualize where you stand from either AR, AP, or just overall working capital in general. So I have a dashboard set up for us here called AR, AP, very creatively named. So then, just as an overview real quick before we go into detail of this particular dashboard, you can have as many dashboards as you'd like. It's completely unlimited, and each dashboard is comprised of widgets. That's what we call these little square things here, are widgets. The majority of widgets are like the ones we see here, where they are actually graphs that are connected directly to the databases that we pulled in, the same type of databases we use for our reporting. It is actually also possible to create a widget that connects directly to an Excel file. It's actually an interesting way to be able to distribute, say, an income statement or maybe a sales report, but allow it so that the user of the data doesn't actually have to access the file Excel. They can look at it through something like this instead. Now, I just drew up some examples for us here, so we can look at it real quick. So, for example, this outstanding AR graph will allow us to drill into anything that is a certain range of age. So we have obviously 30 to 1 to 30 days past due, 30 to 60, 60 to 90, and more than 91. So let's say we want to drill into this more than 91 days and see who's at fault here. Looks like for the most part, customer 85 is our main culprit. Whoever customer 85 is, they owe a lot of money. And so we can drill down this level to see the customers that specifically owe the most. And then to take it one step further, any point on a graph like this, you can click and then click drill down list. This allows you to access the complete list of transactions that make up that, what was it, 4.7 million that this customer owes. And so you can see every entry into our AR module, what they owe. You can see the individual amounts, you can see the bill numbers, so the invoice numbers here. All of this information, of course, being brought in from the accounting system, mapped into the database to be available here. Now you can control the levels of the drill downs here. The way I have it set up is to allow a drill down first from a range of days outstanding down to customer level, even one level more down to the invoice dates. The level of aggregation there is completely customizable and unlimited. To take it another step further, you could also have a file like this one right here, which is connected directly to an Excel file, which allows us to see just a complete list of all the different customers that are outstanding, due date, stage status, amount, so forth. So it's become a pretty common ask of customers to be able to get a better handle on their overall AR and AP. And so this is becoming a more interesting way to be able to track it.
Great.
So
Can you?
15, yeah. So any questions? Let's jump on it.
Okay. Sean, can you tell us a little more about how tracking your costs and margins and your ARAP, how does that help finance teams prepare?
When at this point, it's so much more about, cash on hand, right? So I hope this isn't happening to you all, but I would imagine that some of you are experiencing longer and longer days outstanding instead of average days outstanding for the receivables lying around 30. The numbers we're seeing are extended out to 45 to 50 days. So less cash on hand means got to come up with some ways to keep the cash flow rolling. So it's going to influence obviously production. If you're in manufacturing, it's going to influence the decisions you make from a production standpoint. It's going to make, and it hopefully will give you some better insights into who you need to go after to collect payments from, and hopefully not make it so that you have to start withholding payments. So your AP days continue expanded as well. So it's important both from a cash flow perspective as well as understanding not just, of course, if you're going to make payroll, but further down the line, if the thing is going to be relevant.
Okay, thanks. And we have another question that came in. Is it possible to customize the layout?
The layout of a dashboard, absolutely. Everything is customized. Dashboard perspective, you can move these widgets around. So you can edit the layout right here, the dashboard itself. You can move things around. But from a more overall perspective, any Excel file can look however you want it to. Even the Datarails overall interface can look however you want, to the point where you can change color schemes, the colors of the graphs, the colors up here. Instead of it saying Datarails up here, you could even have the name of your company up there. So the entire platform is completely customizable.
Okay, thanks, Sean. Okay. Any last things that you want to add about how people can plan ahead and why that's important?
Without overloading people, I think we've covered everything so far.
Sounds good. Okay, I think we got through all the questions. So thank you everybody so much for joining. I've put in the chat how you, if you want to get a one-on-one demo, obviously Sean was showing you, how it works in general. If you want to get more of a sense of how it could work for your specific business, then a personalized demo is something that you can request through the website, www.datarails.com. Thank you so much, everybody, for joining. It was great having you. And thanks so much, Sean, for that tour. That was great. Bye-bye.
Thanks, everyone.